In today's video, we're going to be talking about why Bitcoin could potentially rally to 46K over the coming weeks. We'll be talking about what this represents around the halving event, because historically we tend to see rejections at this 8-degree black diagonal resistance. Could that be the case prior to the halving once again? And also later, could we retest this as a new support? Subscribe to the channel for more videos like this in the future, and let's dive right into it. So typically we tend to see, of course, bear markets last around a year. This has been the case over the past few years. You can see how the perfect mirroring is intact across cycles. Bear markets tend to be around 365 days, and then we have a macro accumulation area, and this is this orange region here. And this macro accumulation area is where we currently are in the cycle right now. And in these macro accumulation areas, we tend to see lower highs develop. So this 8-degree angle right over here, this black diagonal resistance, is a point of rejection in the macro accumulation period. This macro accumulation period tends to span all the way to the halving in this chart, particularly because going into the halving, we're still seeing undervalued Bitcoin, but after the halving, we see a very sizable change in how investors react to price action, because in the macro accumulation period, you can see here from the black diagonal trendline resistance, we reject here, but just after the halving, which is represented by this blue vertical line here, you can see how market psychology thus just changes within a period of around 200 days. Before the halving, we reject from this trend line. After the halving, we just blow past beyond it. That's how it is. And we then successfully retest this trend line as a support. This is what that black circle just showcases to us. So in 2015, we saw a revisit of that trend line. And in 2019, we also saw that revisit on multiple occasions, rejecting from here quite successfully. But after the halving, you can see here, break beyond that trendline resistance, and then the black circle retest, which is successful. And just notice how successful retests enable the parabolic uptrend towards the upside. Retests enable the parabolic uptrend towards the upside. So across cycles, rejection prior to the halving and revisit here, that's quite important, but then easily breaking beyond it after the halving. Here, rejections before the halving, and then easily rejection initially, but break beyond it to turn it into a new support. So based on these situations here, and based on that technical aspect of what we tend to see across cycles, this technically means that we could see 40K plus going into the halving, which is quite interesting, because that would mean that we'd need to revisit this black trendline resistance, and we've seen that happen over the past few cycles. So why not? We can't quite discount that. In the same way we can't discount a deeper retrace, because we've seen deeper retracements in this macro accumulation period. We've seen retracements turn into reaccumulation ranges as well, and we've seen retracements around the halving period as well. As you can see here, around the halving is when we tend to see lots of downside volatility. But we have to also mention that closer to the halving in 2015 is where we got that revisit. But in 2019, June, is when we saw this trend line act as a resistance. So in 2019, we saw price revisit this trend line a little bit sooner, and we saw price reject from there on multiple occasions. Whereas in 2015, 2016, we revisited this trend line, rejected from it once, and then recovered in a U-shaped reversal around the pre-halving retrace to rally to new all-time highs later on. So 46K is where this trend line is representing price around the time of the halving. We have to understand though, this trend line is declining and is going to represent lower and lower prices as price goes on and as time goes on, because 42K is where this trend line will reside around 214 days after the halving. And 214 days after the halving is where we tend to really just have that successful retest and already be rallying to new all-time highs. So 215 days after the halving is when we'll probably break to new all-time highs. That has been the case across these two cycles. So 200 days after the halving, we should be beyond 69K, which is something to look forward to. But before we rally to that 69k region, we'll probably have to revisit 42k and break beyond it to turn it into a new support, to register this black circled retest attempt, which will probably be successful to springboard price to revisit these old all-time highs and break beyond them quite comfortably. But that's all after the halving, and 200 days after the halving to be precise. In the meantime, we can still see lots of upside as well as downside volatility going into the halving event. Around 5.5 months are left. So if we just do this, we have this same period left, 5.5 months left. And you can see that in 2019, we saw upside volatility, we saw downside volatility, upside volatility. So lots of seesawing in price action. In 2016, we saw reaccumulation range, see lots of pullbacks as well in downside volatility, but then see a breakout towards the upside and then downside volatility as well. So if history is any indication, we could go in any direction really over the next 5.5 months, but generally the direction after the halving is going to be only up. Going into the halving, we have to make the most of these deeper retracements because those will be the last bargain buying opportunities going into the halving. So if we do rally to 46k, we'll probably see a 38% or even 20% to 38% retrace around the halving event. But even in the new year, if we just continue to maintain these highs, in the new year, we tend to see downside volatility across cycles as well. So some sort of upside in the short term. We know that this is a key resistance area and we're just below this region. So we need to turn this into new support if we're going to rally to 46k. And notice how this is a resistance right over here. And that's approximately confluent with this trend line. So it's either flip 35k into new support, and then we'll probably rally into 40k plus, or reject from 35k and we'll probably drop into 31 first for that retest attempt, because this sideways reaccumulation range is an area of old resistance. Could it turn into a new area of support? That would probably be the textbook technical explanation for what could come next. But if we do see any black swan events, could we see some sort of downside volatility into the mid 20s, maybe even low 20s if we're really that lucky? Because the higher price goes from here, the less likely those low 20k levels are going to be. That's just the reality of it. So whether or not we still see some downside volatility into the low 20s, that would be really bargain buying opportunity for long-term investors. But it really depends on whether this 35k area rejects price, and then we still have that scope for those 20k, lower 20k or even mid 20k levels. But if we break beyond here and reject at the 46k being the next major resistance, then a rejection and retracement from here, we really need to see some sort of black swan price action to get those lower 20k and mid 20k levels. Right over here, for instance, when we revisited the black trend line, 38% retracement occurred, which was the top of this reaccumulation range. So that's technically a retest. So if we were to get something like that, where price rallies to 46k and then pulls back for a deep retracement to almost retest 31k, that would be a mirroring of this 2016 period. And that's a possibility that's worth taking into account, because this is a black swan event that occurred. And could we see a black swan event once again repeat right over here? It remains to be seen. But that's about it for today's video. Subscribe to the channel for more videos like this in the future. Like this video if you enjoyed this one, and I'll speak to you in the next one. Speak to you soon.